Okay, so we're going live. Can I see? Maybe my computer might just be moving slowly and we are already live. If we are, I apologize. I can't see from here. Maybe I'll try and close down some of these windows that we got going on. If you're seeing me, good morning. Welcome to this morning's pre-market rundown. I have a bunch of windows open that I probably need to close, so I'm going to look to do that. Let's see if I can close some windows down. Okay. Still have no idea if I am live. Yeah, not gonna lie, I set myself up for failure this morning, guys. I had Zoom open, I had recordings going in the background, I had probably 30 windows open, and YouTube. Let me see if I can get something happening. Right now, YouTube Studio not responding. Oh my gosh, weird. Wow. All right, guys, we might have to end this stream and come back because this is insane. Let me see. If I am, okay. Oh, all right. We're live. Awesome. Amazing. Here, good morning. I don't know how long we have been live or if we just went live. Carla or Vivian, can you let me know? Have I been live this whole time, or I have no idea? But welcome to this morning's pre-market rundown. This being our daily session where we go over any and all information necessary to keeping you consistently profitable here throughout these crazy markets. We got, tons of important things on the docket here. You've been live all this time. Okay, awesome. That's what I thought, but I couldn't tell. My screen was literally frozen on going live, and I was like, all right. And I could see absolutely nothing that was going on. So while we're live, I'm going to take this time to go ahead and close down some of these dialogue boxes or some of these boxes that I have up, because I've got way too much going on here. Okay. Cool. All right. Well, I might just let the rest of them rock out just so I don't mess up a good thing. Now that we're here and we're live, we're good. Carla said we're ready. Look, all right, awesome. I just got to make sure I'm ready because I was frozen, right? I was frozen on my screen and then frozen across all my other windows here. But good morning. Like I said, we're here to go over the important news and notes. Most importantly, the mindset necessary to break down what is going on to keep us consistently profitable. We had another great day in markets yesterday. We came on here and talked about crypto running, and we played crypto related tickers, and they paid, right? 3 different tickers, all 3 of them paid. So tuning in here really is worth its weight in gold. So you're in the right place right before that bell rings. As always, make sure you're putting that 1 in the chat, signifying your intention to get 1% better by the end of this session. That's all we're trying to do, right? Come here ready to execute, ready to hit the ground running in the right mindset, and you will take full advantage, right? But mindset is everything. It's the lens through which you perceive opportunity. If you don't come in with the right mindset, right, you aren't ready to pull the trigger when the time comes and you miss out on that payday. So always come ready to execute. Make sure you're getting yourself in that mindset. And without further ado, we're going to dive in. So our top news here is inflation watch. The closely watched consumer price index is seen easing further in March, but not nearly enough to meet the Federal Reserve's price stability mandate. The inflation data due later today will offer, and this newsletter comes out, probably 7:30 a.m. So that's what they mean later today. It's already come out as of this point. The inflation data due later today will offer a signal as to whether the Fed will raise rates or pause hikes in May. One of the biggest debates on Wall Street. Economists expect March's headline CPI to rise 0.2% sequentially lower than the 0.4% pace recorded in February. On a year-over-year basis, headline inflation is expected to climb 5.2% compared with 6% in February. Stripping out the volatile food and energy sectors, core CPI is expected to advance 0.4% month over month versus the 0.5% February reading and 5.6% year over year versus 5.5% in February. Now, bigger picture, while the headline print would mark the slowest annual increase since May of 2021, it would still be more than double the Fed's 2% inflation objective. Remember, the Fed has two jobs: to keep the economy in full employment and to keep inflation at 2%. Now, the monthly increases in CPI for January and February also do not inspire confidence that 2% is around the corner, said Greg McBride, chief financial analyst at Bankrate. That gap means another 25 basis point rate hike will likely take hold at the Fed's May meeting, which Fed funds futures are largely pricing in, bringing the policy rate target range to 5% to 5.25%. Markets are expecting the Fed to pause rate hikes in June. Quote, to feel good about where inflation is headed, we need to see more than just moderation in headline and core inflation, said McBride. Quote, we need to see moderation in price pressures across staples of the household budget: shelter, food, electricity, vehicle insurance, apparel, and household furnishings. Note that the Fed will release the minutes of its March meeting in the afternoon, which will be closely watched for clues on how policymakers assess the rate path in the wake of the banking crisis. So again, we get FOMC minutes today at 2 p.m., right? So make sure your favorite voice assistant knows. Alexa, remind me at 1:50 p.m. that we get FOMC minutes at 2.
Okay, I'll remind you at 1:50 p.m.
Awesome. Boom. Now, nobody will forget. And it's just very important, right? Very important because the notes from their meeting will be released. They had the meeting already. The meeting notes are transcribed and then they're released to the public. So we get the notes, of the meeting and kind of their feelings surrounding, interest rates and what they're looking to do, kind of if their path might shift. They're, them weighing in on the banking crisis, right? So we get a lot of good information. So we get CPI data this morning, which came out, roughly 21 minutes ago at 8:30 a.m. And then we also get FOMC minutes at 2. So big day full of big data, right? In terms of seeking alpha commentary of note, year-over-year core CPI is expected to run hotter than the headline number for the first time, said Michael Kramer, leader of investing group Reading the Markets, in a move that could shift how investors think about inflation, transitioning away from the volatile headline CPI and instead focusing more on the sticky core CPI metric. Mott Capital's Kramer said, the quote, already overvalued stock market is not pricing in the potential for a rate shock stemming from a stronger than feared CPI report based on levels of implied volatility. Seeking Alpha contributor Demir Tokic reckoned that core CPI bottomed in February, implying that the disinflationary trend the Fed Chair Jerome Powell has touted is potentially short-lived or a nonlinear event at the very least. That in turn suggests higher for longer rates, which would bode poorly for big tech stocks. So it's kind of like, basically we had CPI that was going down and then it went back up. So now people were like, okay, it was a fluke. Inflation wasn't actually going down. It was just a blip. It's not a trend. So we need to keep rates higher. But this morning we got more data. So let's go ahead, now that we've built up the suspense, to dive in and see exactly what happened here data-wise. Let's get that pulled up. Even though technology wants to be combative this morning, we are pushing through, making sure that we are equipped with everything we need to go into battle today and to come out with nice little stacks of cash, right? That's really the end goal. Let's see here. Okay. We're going to pull up on our guy, our friend, our friendly neighborhood news plug, Walter Bloomberg. Now let's see. Okay, so U.S. March consumer prices rise 5% year over year, estimated 5.1%. So that's good. That's 0.1% less than what was expected. U.S. March core consumer prices rise 0.4%, estimated 0.4%. U.S. March core consumer prices rise 5.6% year over year. and the estimated was 5.6%. So it looks like CPI was directly in line with what was thought. Um, and then overall, in terms of core, so core CPI month over month was up 0.4%, year over year was up 5.6%. Both of those were exactly in line with expectations. And then it looks like overall CPI rose 5% year over year. It was estimated to rise 5.1%. So that's like slightly better than expected. Um, U.S. short-term interest rate futures price in less chance of 25 basis point Fed hike in May after inflation data. Spot gold jumps after U.S. CPI data. Treasury surge after March CPI release, rises less than forecast. So it looks like overall, even though core CPI was directly in line with what was expected, it looks like in terms of overall CPI, we had a slight, better than expected number in that regard. Oh, think or swim. I had you open in the background and then it decided to lock me out. All right, cool. Yeah. So overall, we got markets, surging on that news, right? Knowing that we're coming into data like we had today, made that very clear yesterday, saying, hey, we got CPI data in the morning. This thing could go any which way, right? Whatever you swing, make sure that you are fine with the risk of swinging that. Markets like that CPI data that we got. So as of right now, we're up. Does that mean we remain in the same spot? No, right? There are a lot of things that could happen. I'm not leaning one which way or the other, right? Made great money yesterday, looking to make great money today, regardless of what happens. But I'm not sitting here pulling for, oh, we're going to be bullish or, oh, we're going to be bearish. I'm going to let the charts determine that for me. But overall, we've got this. And then we've got the Fed minutes, right? FOMC minutes coming out at 2 p.m. today. So we've got, a slew of data that will be impacting price action. But overall, as of right now, that CPI data, the initial reaction is a rocket up. Right now, we've seen it rocket up pre-market and sell off the whole day. Right after that. So again, there's nothing that guarantees that we continue to push higher. But overall, right, it's a good initial reaction, or at least a bullish initial reaction. Good and bad are just relative, depending on where you're positioned, right? Now, in terms of stocks, bearish call. Wells Fargo issued a near-term bearish call in the U.S. stock market Tuesday, arguing that Wall Street should anticipate a market correction over the next 3 to 6 months. The firm said the S&P 500 could fall as far as 10% during that period, which would send the index to a level near 3,700 points. We are maintaining for SPY, that's 370, right? We are maintaining our 2023 SPX price target of 4,200. But believe the risk to reward over the next 6 months is skewed to the downside, Wells Fargo said. Over the next 3 to 6 months, we expect to see a 10% correction with the SPX trading down to 3,700. The rationale, the rationale behind the call includes the Federal Reserve's aggressive tightening, potential liquidity problems brought on by the bank crisis, and concerns over consumers being increasingly more dependent on credit to sustain spending. Eric Basmajian, leader of the investing group EPB Macro Research, believes current data implies that a recession is underway or imminent. Policy should be easing already, but the Fed is still raising rates, targeting lagging economic indicators. Monetary policy has never been this opposed to the business cycle signals in the last 50 years. So overall, Wells Fargo issuing a near-term bearish call on the stock market. I don't care anything about what Wells Fargo has to say, right? You guys know exactly how I feel about Wells Fargo. They're thieves, they commit fraud, and that's just how I feel about it, right? It's multiple. They literally get fined every other year for doing something else that's shady. They take advantage of, people of color and open up multiple bank accounts in their name that they have no idea about. So I'm never going to say a positive thing about them, unfortunately. But that just is what it is, right? Those are my personal feelings in terms of like the objective call. This is something where it doesn't matter if it's Goldman Sachs, Wells Fargo, whoever, right? You've got to make sure that you have the ability in order to go down and break down on the charts, right? Are things looking bullish or are they looking bearish on short-term, medium-term, and long-term time frames, right? At the end of the day, none of these firms are required to tell the truth. That's what's important, right? And even when they are, they don't really get in much trouble for it, right? Even banks that lie and steal. I mean, we just talked about Wells Fargo, right? They lie and they steal. Multiple banks lie and steal, and they're still allowed to continue. So again, you have to recognize that, oh, these banks say this is going to happen. They also say that your money is secure, right? So it's just like at the end of the day, it's kind of when it comes to markets, you trust no one except for yourself in terms of determining, kind of what the outlook is. I'm not saying that because I'm a perma bear. You guys know that I am quite bearish when a lot of other people are bullish because I'm just a realist. I'm a chartist, right? I make moves and observations, and all of my outlook comes based off of the charts. So it's not like I'm saying, oh, the dumb bears, like they just want the sell off to happen. No, if the sell off happens, awesome, we'll make money off of that. If it doesn't happen, awesome, we'll make money off the upside as well. But until it comes, right, we're just prepared for anything. So we've seen a lot of bearish news coming out the past few weeks. We've got a number of executives, tech executives specifically, that are selling off a lot of tech stock, right? So that's always something you want to be aware of, right? Are they doing it for tax purposes? Are they doing it because they expect us to top out and head lower? We don't know, right? We don't know because we cannot physically talk to them. So a lot of people are saying that, hedge funds are hedging up and, place their most bearish bets since November. So it's just like, and I forget when that was, like November of when, if that was November of 2020 or when. I might actually take the time to look that up. But there's just been a lot of bearish news, right? And bearish activity in terms of like stocks being sold. So it's something where, yes, you take note of that, right? And you make sure that you're paying attention to that. But I saved it on my phone. That's why I was looking on here to try and pull it back up. Yes, you pay attention to those things, right? But at the end of the day, you're not sitting here saying, okay, based off the fact that someone is executing a part of their game plan and I don't know the whole plan, based off of that, I'm going to do something, right? That's like saying, oh, I see, I don't know, I see my brother going into the fridge, right? My mom must have told us to take some food out to thaw to get ready for dinner. So I'm going to take everything out of the freezer. And then your mom gets home and she's like, why did you waste all this food? Oh, I saw my brother going in the fridge. He was just getting some juice, right? You didn't know the full extent of the game plan. People move that same way in markets. They're like, oh, billionaires are selling stock. Time for me to go bearish. And it's like, you don't know his situation. You don't know their game plan, right? Same thing with bearish bets, right? You could be doing that in order to hedge. So it's just, it's tough to know. And that's why you've really just got to pay attention to the charts. But looking here, there was a headline: large speculators, mostly hedge funds, saw their net short positions in S&P 500 E-mini futures increased to roughly 321,000 contracts as of Tuesday, according to data from the Commodity Futures Trading Commission. And then just ahead of CPI release, hedge funds increase S&P 500 net short positions to highest level in more than a decade, right? So we've got, a number of people going short, buying puts, right? Institutions buying puts. This is the most bearish reading since November 2011, following the downgrade of the U.S.'s sovereign credit rating. And then data from JP Morgan shows the firm's hedge fund clients last week raising bearish wagers against the exchange traded fund in financial shares. So it's like there's a lot of bearish headlines that are coming out, and people are like, oh, we're going to drop, we're going to drop, we're going to drop. I need to see the materialization of that, right? I need to see that coming to pass in the charts first, but it is something that we take into account, right? We take into account, okay, there are bearish fears. I'm not going to let that fear monger me into doing something that I don't see the need to right now, right? So we'll continue to watch, and if we see, that materialize in terms of the charts, awesome, cool. Then we make our moves and we position to make money from the downside. But just because all these institutions are placing bets does not mean that we need to follow them, because when they weren't placing downside bets, like at the beginning of 2022, and they lost a ton of money, right? So to be honest, I don't believe these institutions, do necessarily know best, because there are a lot of institutions that weren't selling at all-time highs, right? They weren't selling at all-time highs. And it's just as simple as that. So any of these bearish calls that you see, I want to make everybody aware of them, right? This is happening. We do have Apple executives and all these different big tech executives selling, but does that mean that it's time to, kind of go all in on puts just because you see other moves happening? No, we need to see that for ourselves, right? Otherwise, you could end up getting hung out to dry. And when you look back at it, you're like, wow, I really didn't see anything definitive that led me to believe that. So why did I do that? Don't let fear push you into making an ill-advised decision. Now, in terms of economic news, downplaying risks, U.S. Treasury Secretary Janet Yellen downplayed the greater risks associated with recent banking stresses that the International Monetary Fund raised as a serious concern. When asked about the IMF trimming its 2023 global growth forecast, Yellen said, quote, I wouldn't overdo the negativism about the global economy. The U.S. banking system remains sound, she said. She noted that the global financial system remains resilient due to significant reforms implemented after the financial crisis. Yellen remains vigilant to the downside risks surrounding the world economy in the wake of the Ukraine war and banking pressures. I'm not anticipating a downturn in the economy, although that remains a risk, she said. The IMF dimmed its outlook slightly for global growth to 2.8%, but said gradual disinflation is expected in all major economies. Pierre Olivier Gourinchas, economic counselor at the IMF, raised concerns over sharp policy tightening that impacted the financial sector. He stressed that a full-blown financial crisis is, quote, not where we are, even if more financial tremors are bound to occur. So we've got, officials downplaying risk. Is that new? No, right? Again, half of the battle, in fighting a battle for stability in financial systems and around the rhetoric and around the speech around financial systems is just telling people not to panic, right? And whether or not that's the truth does not matter. Again, in Janet Yellen's job description, nowhere does it say she has to tell the truth. Absolutely nowhere, right? So I think it's very important to recognize that because, again, Jerome Powell lied to us for what, a year, saying that, oh, no, this is just, what is it, transitory. This inflation is transitory. It's transitory. It's transitory. Suddenly it's at almost 10%, 5 times what inflation is supposed to be. Oh, just kidding, guys. Turns out I was kidding for a year and a half, lying to your faces literally every other week. So it's just the same thing here. Whether or not this is true, we cannot tell. But as of right now, people aren't necessarily believing it. And I think that's why they're trying to push so hard because, we're still seeing record outflows in terms of people pulling money out of banks week after week after week since this has happened, right? We don't have banks collapsing, but people are pulling money out of banks, which is very important. And they're not stopping that, right? It's every week. By the end of the week, they're like, another 50 billion has been withdrawn from banks over the course of the past week. And it's just like, so we're not completely out of this banking crisis, right? Now, in terms of the financials, boosting reserves, several major U.S. banks, which contributed a significant portion of the $30 billion in deposits to aid First Republic Bank, ticker FRC, are now planning to bolster their reserves by setting aside around $100 million each. This group includes J.P. Morgan Chase, ticker JPM, Wells Fargo, ticker WFC, Citigroup, ticker C, and Bank of America, ticker BAC. The decision to boost their reserves is driven by accounting regulations that require provisions to be set aside for potential losses across various assets. Last month, 11 of the biggest lenders in the U.S. pledged to deposit around $30 billion with First Republic. Ahead of earnings reports by major banks, Chuck Walton, leader of the investing group, the Dividend Kings, compared Bank of America and Wells Fargo to see which they better buy. Quote, I view the banking crisis as a prime buying opportunity for stronger banking stocks. I prefer WFC over BAC, given its smaller CRE loan portfolio, more favorable deposit beta, and the stock's lower 1-year and 5-year PEG ratios. I mean, I like JPM over all of them, just because, JP Morgan Chase is a huge bank. And at this point, they're also scooping up regional bank assets. So, that's who I feel like I like over the course of this whole banking debacle. So yeah, JPM. I don't like WFC, as I've already made very, very clear to you guys. And I feel like we'll get more info on these banks as we move into the latter half of the week because they'll be reporting earnings, right? So we've got a number of banks here. Let's see here. JPM reports 4/14. What is that? Friday? Yep, Friday. We got JPM, which is JP Morgan, Bank of America. And we've got a lot of these banks with a potential inverse head and shoulders on the daily. I think that's very important to point out that if these banks do, right, like let's say we have these larger banks, right, which got tons of people moving to them from the smaller banks, they could absolutely smash it off of earnings, right? Because you have potential inverse head and shoulders on a number of different banking tickers. Let's see here for Bank of America. They report next week, so 4/18. Seeing Wells Fargo reports. Wells Fargo reporting 4/14, so they're on Friday as well. Looks like Wells Fargo already fired a nice daily bull flag. They've got that breakout 2 days ago, and then yesterday they reached price target number 1. So banks, strong. Wells Fargo strong with the breakout. Got to daily price target number 1. So we've got banks kind of with a solid look here. As they head into earnings. So it's something to definitely keep an eye on, as these banks sort of make their way into the earnings confessional. And that's something I'll be paying attention to, right? We'll definitely be paying attention to here. We got JPM coming up on Friday. Might be a great look, right? So that's just a little heads up beforehand, before we get all that going. A little heads up, the banks are a solid place to look right now. Again, playing earnings is very, very risky, right? If you can't flush that money down the toilet, you guys know I'm going to always say it. If you can't flush it down the toilet, don't put it on an earnings play, right? Don't put it on an earnings play because it could go any which way, and it's not guaranteed. Even if a company does beat on earnings, the stock goes up. They miss on earnings, it's not guaranteed that it goes down, right? So, but overall, you like to at least see the potential where there's like, okay, based off of the charts and what I'm seeing, right, which tells me info about this battle going on between buyers and sellers, based off of the charts and what I'm seeing, there is a chance, right? There's a chance. Based off of these charts, it does look like we are accumulating shares over the course of this time period and not distributing them. Which is very important, right? You got to see the picture, right? You have to see that the bones are there. It's like when you look at a football team, you're like, I could see it. It's like looking at the Jets, right? The New York Jets. Like they have a lot of great talent pieces. It's like I could see the case of them making the Super Bowl, right? If they get a good quarterback, they have great wide receivers, a great defense, good offensive line, right? It's like I could see them making the Super Bowl. You have to be able to see that pick. Don't just say, "Oh, I'm just gonna get calls on JP Morgan because," no, you have to see, okay, they've got some solid pieces in place here, right? If I were to make that bet, this is why, and have really quantitative information behind it, meaning ones and zeros, data-backed information. In terms of today's markets, all that has changed because we got data. So everything kind of pushed up, and then let's see here. I don't think it'll go straight up. Yeah, it looks like right now we pushed up, and then we kind of came back a bit. So we'll definitely open green. Will we open hugely green? No, but we will open higher than we closed yesterday. Looks like maybe right on top of the highs, or a little bit further than right on top of the highs of yesterday. So the market will still open green. We'll see if it remains that way or if this is all just, ploy, and we end up heading lower, right? Now, let's see here. In terms of today's economic calendar, we got CPI data at 8:30, and then, of course, 2 p.m. we get FOMC minutes. We don't have Powell speaking today. That is important. No Powell. So everybody thinks, okay, we get Fed, minutes, we get Powell. Those things don't always have to happen together because a lot of people are going to be sitting here waiting for Powell and he never gets on. And then they're like, oh, you got to make sure you're paying attention, right? So we'll finish up here with our rapid fire bullet point rundown. Biden signs bill to end COVID national emergency after bipartisan support. So we talked about yesterday that came to pass. Biden signed that bill. Justice Department calls on appeals court to block Texas judge's abortion pill ruling. Moderna stock dips after flu shot fails to meet early success threshold. Walmart, ticker WMT, to close for underperforming Chicago stores amid mounting losses. Apple may face antitrust probe in France over changes to app tracking policies. Again, Europe, very, very tough on American tech, kind of as they should be, though. Elon Musk says Twitter is now roughly breaking even, has about 1,500 employees. Intel, ticker INTC, led chips higher as CEO Gelsinger met with China to discuss industry. Deutsche Bank, ticker DB, said to be winding down its technology centers in Russia. Emerson, ticker EMR, nears deal to buy National Instruments, ticker NATI, for $60 a share. Always remember that little nugget. The company that is buying another company, in this case Emerson, ticker EMR, their stock likely goes down from buying National Instruments, and then National Instruments is the company getting acquired. Their stock likely goes up, so you'll likely see NATI stock going up. And then Diamondback Energy, whose ticker is FANG, FANG, to explore sale of West Permian Basin assets. So that'll overall wrap us up here for the pre-market rundown on April 12th, 2023. As always, if you got even one valuable piece, one valuable morsel of information from this session, just show love to the account, right? The Instagram Reels, the YouTube Shorts, the TikToks, right? Posted an Instagram yesterday, right? If you guys enjoyed the pre-market rundown yesterday, right, go drop a money bag emoji or a money emoji under yesterday's post. We came here, and for the free, you got the breakdown of 3 stocks that ran crazy. I'm talking 16% at the highs and 14% at the highs that the stock ran overall. Like, that is headline topping news that you get the heads up before a stock runs almost 20% in a day, right? That is what being in this environment gets you, right? So make sure that, again, we're showing up. I'm showing up for you. Show up for me. We continue to grow together. Also, make sure that you're telling people, right? If this is great information, you're enjoying it, share this with people. Friends will let friends stay broke. We all have people out here that are trying to, make it, trying to continue to push forward, trying to better themselves in 2023, right? Throw a 7 in the chat if you're looking to better yourself in 2023. You're not the only person that looking to do that, right? So make sure that you share this with other people, get them in here so that they're taking advantage of these opportunities as well, right? I appreciate you guys being in here, investing in yourself. That's always going to net the biggest return. People say, Adam, should I get Apple? Should I get Nvidia? Invest in yourself, right? Invest in yourself so that you have the whereabout and the chutzpah, right? The courage to act when it's necessary, right? Yesterday, we talked about what was going to run. Did you execute, right? If you didn't execute, then now you need to focus on, okay, I need to build up the courage, in order to push that button and dive in, right? Because execution is key. Does not matter if somebody said for you to buy Meta or buy Facebook back when it came out. If you didn't do it, doesn't matter, right? Same exact thing here. We've got to work our way up to execution, make sure we're culturing that mindset. But shout out to you guys for getting 1% better today. I may or may not have to be on the road today. I'm not sure. I might accompany my mother to a doctor's appointment, so I've got to see about that. But overall, right, make sure that you're aware. 2 p.m. we get FOMC minutes. We got that inflation data pre-market already. What else? Nothing. Just have a great day. Be careful out there in markets. Make sure you exercise patience. PAYTIENCE. And I'll see you guys back here tomorrow for our next pre-market rundown. Have a good one.